I'm so used to saying the word chart, I said let's flip to another chart. I'm watching charts all day. You know, you start seeing them when you're going to sleep.
Justin knew what you were talking about.
Yeah, he knew exactly what I was talking
Cecil
about.
B. DeMille, Justin.
He's our producer, director, the whole deal. He handles
Makeup artist.
I took him up with me in New York City when I did Fox a few weeks ago, and he got a chance to see what the big guys do
really?
in the back there.
Wow.
Absolutely amazing. I didn't even realize what happens back there.
Is that right?
But, I think it's controlled mayhem. But it all comes out perfectly. At any rate, Justin's got some good ideas about things that we're going to be doing in here to make this more professional. But I like it where we just sit down and talk about things.
You get more information comes across that way.
Yeah,
absolutely.
This is something you could never do on television. I mean, if this was CNBC, they say, Rick, let's sit down and talk about 401ks.
Right.
All right, Rick, thank you. Let's go to what's the hot stock of the day.
Yeah,
you know?
exactly.
And that would be it.
Exactly.
But where were we just now?
We were talking about my greatest successes come from using the MU100 concept and the S&P bullish percent concept.
And driving the straight line.
Just use the relative strength to say, okay, what's in favor, what's out of favor.
That's right. So you're not contacting your customers every week and saying, hey, we need to change this, we need to change that. The relative strength takes you for the long haul.
Exactly. And if you just explain the bullish percent concepts and the relative strength concepts to a client, Tom, these guys are pretty well educated. I mean, you don't have to explain things twice to them. They're a pretty quick study on that. It just makes a lot of common sense to them that you would be help them make better decisions on their portfolio of funds by using those two concepts. Not going in and out all the time, just using what you get. You got to make lemonade out of the lemons you have. And everybody thinks their mutual fund options are bad, but relative strength will help you make the lemonade out of those lemon funds that they own and give them a decent return.
Right.
So it's not anything that anybody else that with Dorsey Wright Training can't replicate. My business model, if you will.
So what does a broker do today that would like to get involved in this type of business? I mean, if let's say he's at a firm that just doesn't have any platform.
Right. Well, I had. This is interesting you say that. I had dinner with Mike Moody and Howell Faust last night. And Mike was talking about a brokerage firm, and I don't even know what one it was.
Not necessarily make the name.
I don't even remember. They have now. They sent a memo out prohibiting brokers, even for free, advising clients on a 401k menu.
Because of the potential liability?
Exactly. Because, you and I have talked to a lot of guys over the years that have done this just as a free add-on for their stock clients.
Well, I'll tell you, one of the problems, and that brokerage firm might be smart to be doing that.
Right.
Because if you have, and I don't know what this firm is, I have no idea what the name is.
Right.
But if you, let's say, given you have a group of brokers at this firm, whatever firm it may be, that are really untrained.
Right.
Because many brokers are today.
Yes.
Many brokers are really kind of born to raise money and give it away to managers.
Exactly.
If they're totally untrained to give someone advice, then if I'm a firm and I've got a group of brokers who really don't know what they're doing as far as advising to buy this and to manage this and whatnot, then I got to put the clamps on it until I can figure a way that they can just raise assets and give it to
monitor it. Yes.
Give it to my group here who will do the managing.
Well, if they're a lot of, I guess.
Now, let me interject.
Okay.
I would rather, let me go further here. I would rather be the firm that says, look, I want my guys out there getting this business.
Exactly.
So what I'm going to do is I'm going to beef up my training department. I'm going to do whatever it takes to educate my brokers, make them SEAL Team 1 of 401k advice, or SEAL Team 1 of advice period on Wall Street, and let's go out after the business. It's just like the option business too, where so many firms eschew the option business. I would take this tack of let's make every one of my brokers an registered options principal.
Right.
So when he goes out there, he knows exactly what he's talking about, and let's go get this business. Let's not be afraid of it. Let's get it.
Go get it. Yep.
Which would be my tack.
You bring up a very interesting point, Tom, about how dangerous it could be. Let's say you're sitting at a regional firm that has a managed mutual fund product, which a lot of them do. If a broker wanted to add value to his best clients on the 401k side, if you just took that 401k plan menu and cross-referenced it to the 3,000-4,000 mutual funds that they think they have database on, like the Morningstar information on, that's not any value added on that menu. If you're just looking up the Morningstar, how many stars it's got, you're going to get people in hot water sooner or later. And if that's all the research they're doing to help clients pick their funds, they are going to have problems.
Didn't Morningstar 6 months ago or maybe a year ago say we've got a problem with our system?
They do have a problem with their system.
But didn't they come out and actually say that?
They did come out and say that. They also came out with a 401k managed product. that is creating a lot of fervor within the industry because it's competing directly with the advisors that buy Morningstar.
I got you.
So I think it's 19 years that Morningstar has been in existence as an independent database of qualitative advice, or whatever you want to call it, on mutual funds. They now are competing with those same advisors that buy that advice for the 401k management, for a 401k management product.
Well, I'll tell you, they're not the only ones that are going to be competing. We just talked with a very large bank yesterday that want our education and services, and where it is the private client bankers.
Yes.
Like I have a banker at a certain bank who's my private banker.
Right.
When I call up, he's the one I deal with.
Yes. Yep.
Well, they're getting registered now.
Oh, they are?
At this large bank. These guys are all registered. So here's a gentleman who knows all my finances, knows what I have at that bank.
Right.
When I transfer money internationally or do whatever I do, he knows exactly what it is.
Right.
Now he's getting registered.
Right.
Well, at my bank they aren't yet, but at this other large bank they are in fact getting registered, which is more competition for the individual broker out there.
Exactly. Well,
but here's a guy like a CPA who is really in tune with the broker's customer.
Oh,
like,
yeah.
You may be Jimmy Jones over here is the stockbroker of Mr. Smith. Mr. Smith has his own private banker at maybe even that bank where this Jimmy Jones is located.
Exactly.
The private banker knows more about his finances and deals with him much more on a daily basis than the broker does.
Exactly.
The customer eventually says, hey, why don't I just deal with you, who's my private banker? Take care of it all.
Take care of it all.
So there's another layer of competition that's coming in here.
You talk about new accounts and how to get into business time. One of my business models when I started the 401k advice was to overcome that very same problem. You have a lot of competition when you go after an individual investor's, what I call after-tax account. His checking account, his money market, his stock account, bonds for the kids, or whatever he's doing. When you prospect an individual on that basis, you don't have any competition when you prospect an individual on the advice on their 401k plan. They've not ever heard of anything like that before. If they did, it's a memo they got, oh yeah, by the way, January 1st we're starting with Financial Engines.
Well, for the longest time, if a broker can't actually take possession of that account and move it into the firm, then he can't advise.
You can't advise.
So no one actually, when the 401k, if you had a 401k, the heck with that. You do what you got to do there. I want to give you ideas and stocks over here.
Exactly. Now, from what I understand, Merrill Lynch has confined their advice to plans that actually have custody at Merrill Lynch. So I don't know if they can solicit anybody that has a 401k plan not custodied at Merrill Lynch.
I see. Yeah,
they get past the custody thing that way. But I know Stifel is not like that. They can do anything you want like that. Yeah,
they're pretty progressive.
Very progressive.
Yeah,
very. And I can't understand why I got the documents, the same RIA documents that I have, or that Dorsey Wright Money Management have. I don't know why people can't be more creative and do that. It's just a simple transaction. If you disclose to the client what you're doing, that's all you have to do. It's disclosure of how you're managing the business.
But do you think maybe a lot of these firms are saying, okay, if we get into that business, then that says that I'm in essence saying I have qualified people to give advice.
Right.
And what if the firm sits back and realizes, the tack we have taken is just to put out asset gatherers.
Yes.
We don't want people who really give advice out there. We want an asset gatherer who can sit down with Mr. Jones, and Mr. Jones needs his strategic pie, and it says, okay, you should be 60% equities.
Right.
Okay, my 60% is going over here to my mutual fund in-house that manages it.
Right.
We need 20% bonds. Okay, it's going over here to my bond account that's managing it. We need 10% international. Okay, it's going over here to the international guy that manages it.
Right.
And there's really isn't any advice other than sitting down with the customer, getting the information, coming up with the strategic pie, and giving it away. So maybe they're a little worried about the real advice.
If you can't custody the 401k assets, then you have no business. If you're talking about custody and giving it away to somebody else, you have to have that money at that firm.
That's right.
Yeah.
But otherwise, you're going to be straight out there with advice.
Exactly. You're just getting paid on advice. Exactly. That's what
bread and
butter is.
And that can be a harrowing experience for a brokerage firm that has a group of brokers that are untrained.
Exactly. Yeah, I never thought of it.
And I'm not saying which firms are that, but I'm sure there are some firms out there that have brokers that have gone in this direction.
Right.
That to give straight advice, to be paid in advice, can be a nightmare.
It is very much of a nightmare.
But if it was in-house in custody, then we could just dole it out and give it to whomever we need to
give it. These ERISA law changes that have passed the House and the Senate and are waiting for a final bill, they would allow, from the industry things that I've read, they would accelerate the trend towards self-direction. like these law firms that are LLCs, you can self-direct. Your 401k account turns into a self-directed brokerage account, just like your after-tax money would. At that point, you could give 401k advice. But if you still have a client that's working off a plan menu and his or her 401k is not portable and totally self-directable, you still have to work off that menu. You never will custody the assets.
Right, and that's a lot of what your business is.
That's a lot of what it is.
But
yes.
Maybe I missed it. There are some 401k plans that you can custody?
You can custody, yes. Yeah.
Are there a lot of those, or is it?
The industry averages that I've seen, Tom, is that a few years ago was 2 or 3% of all plans. Now it's up to like 7 or 8% of all plans.
So you're still talking about 90% of the plans are not custody.
90% of the plans are not custody.
So many of the experts, in this business, you got to be thinking advice.
You got to be thinking advice,
and not custody, and not doling it out to the in-house products.
That's where the RIA structure comes in more handy than the broker-dealer structure, because you can truly get paid for advice.
Let's go to one last tape, and I want to ask you some questions on the bulletin board.
Okay.